Assalamualaikum and a good day to our beloved lecturer, Dr. Mariam Jamilah binti Muhammad Hashim. My name is Siti Nashairah Izzati binti Mak Zakri. My student ID is 2024250978. Today, our group will be presenting about Bonia and Padini, the two companies we have chosen for our group project. Before we go into the financial analysis, let me briefly introduce the two companies. Bonia Corporation Berhad is a fashion retailer established in 1974. It is famous for luxury leather goods and designer handbags. It manages several brands across Southeast Asia. On the other hand, Padini Holdings Berhad was established in 1971, is one of Malaysia's largest fashion retail groups, well known for brands like Padini, Vinci and Seeds, which targeted the mass market. Both companies are listed on Bursa Malaysia and operate in the fashion industry, though they serve slightly different segments. Now let's move to liquidity ratios. There are three indicators, which are net working capital, current ratio and quick ratio. First, the net working capital, which is the difference between current assets and current liabilities. Bonia's NWC was 158 million ringgit in 2022, increasing to 190 million in 2024. Meanwhile, Padini's position is much stronger with 727 million ringgit in 2022 and rising significantly to 930 million in 2024. This large gap highlights that Padini's much greater buffer in short-term liquidity compared to Bonia. Next, we look at current ratio, which measures the ability of a company to cover short-term liabilities using current assets. For Bonia, the current ratio was around 2.76 to 3.11 between 2022 and 2024, showing stability. For Padini, the ratio was higher between 3.62 and 4.38. This shows that Padini consistently has a stronger short-term liquidity position compared to Bonia. Finally, the quick ratio, which excludes inventories and focuses on the most liquid assets like cash and receivables. For Bonia, the quick ratio moved from 2.16 in 2022, dropped to 1.9 in 2023, but recovered to 2.14 in 2024. For Padini, it was much higher, which is 3.13 in 2022, 2.72 in 2023, and further up to 3.32 in 2024. This means Padini is less dependent on selling inventory to pay its short-term debts, while Bonia is healthy but it is weaker compared to Padini. Looking at the graph, the trend is clearer. For current ratio and quick ratio, Bonia is stable but consistently lower than Padini. Padini maintains a higher liquidity buffer, meaning it is more capable of covering liabilities without stress. For net working capital, Padini again shows a much larger buffer compared to Bonia. In a summary, Padini is consistently stronger in liquidity, while Bonia remains stable but with a tighter margin.
My name is Nora Saliha and I'll be presenting about activity ratio. Activity ratio is used to measure effectiveness of a firm in using its resource or assets to generate cash and sales. There are 5 types of activity ratio. First, let's take a look on account receivable turnover (ARTO). ARTO is used to measure company ability to collect debts or credit sales from customer. The higher the ARTO, the better or more effective is the company in collecting debts from customer. As you can see on the graph, from 2022 until 2024, Padini record higher ARTO than Bonia. This means that Padini is better in collecting debts or credit sales from its customer. Then, let's take a look at average collection period, ACP. ACP is used to measure the average days taken by company to collect credit sales. The shorter the ACP, the better the company to collect the debts within shorter period. From graph bar, we can see that Padini record shorter period than Bonia in these 3 years. This means that Padini is better to collect debts from its customer within shorter period. After that, let's see inventory turnover ITO. ITO is used to measure the company ability to use inventory to generate sales. ITO also shows the number of times the inventory can be sold in a year. The higher the ITO, the better or more effective the company in using inventory to generate sales. From the graph, Padini record higher ITO than Bonia. It means that the company is better in using inventory to generate sales. Fixed asset turnover, FATO, is used to measure company efficiency in using only fixed assets to produce goods or product for sale. The higher the FATO, the better or more effective is the company in using fixed assets to generate sale. As we can see in the graph, Padini record higher FATO than Bonia. It means that Padini is effective in using fixed assets to generate sales. Lastly, let's see total assets turnover TATO. It's used to measure company efficiency in using all resources or assets to generate sales. The higher the TATO, the better or more effective is the company in using all its resources or assets to generate sales. Based on the graph, we can see that Padini record higher TATO than Bonia. It means that Padini is efficient in using all resources or assets to generate sales.
My name is Nora P1713, ID student 20244136062. I will present about the profitability ratio. First is gross profit margin. Bonia gross profit margin was consistently higher than Padini's for all 3 years. Both companies saw an increase in this ratio from 2022 to 2023, suggesting they were improving their pricing or managing their production costs more efficiently. However, both experienced a decline in 2024, with Bonia margin dropping from 61.2% to 60.8% and Padini falling from 39.4% to 36.2%. This could be due to factors like increased raw materials costs or greater competition leading to low prices. The second one is net profit margin. Similar to gross profit margin, Bonia net profit margin was higher than Padini throughout the period. The significant drop in net profit margin for both companies in 2024 is a key trend. This decline is more pronounced than the one seen in the gross profit margin. This suggests that the decrease in profitability in 2024 was not just from the cost of goods sold, but also from other operating expenses or higher taxes and interest payment. The next is operating profit margin. Padini had a higher operating margin than Bonia in 2022 and 2023. However, both companies saw a decrease in their operating profit margin in 2024. This mirrored the trend observed in the net profit margin, reinforcing the idea that increased operating expenses played a role in the overall decline in profitability that year. Next is return on asset. Padini return on asset was higher than Bonia in all 3 years. Padini consistently demonstrated a higher return on asset than Bonia. This indicates that Padini was more effective at using the asset to generate net income. The last one is return on equity. Padini consistently had a higher return on equity than Bonia from 2022 to 2024. Padini return on equity was consistently and significantly higher than Bonia. This suggests that Padini was more effective at using shareholders' equity to generate profits. Next, for the graph, I will explain a little bit indicator on each graph. For the gross profit margin, Bonia outperformed Padini in maintaining profitability at the gross level. Next, net profit margin. Both companies faced margin pressure in 2024, but Bonia still maintained stronger profitability compared to Padini overall. Next, the third one, for operating profit margin graph, Bonia shows higher peak performance but with volatility, while Padini is steadier but with weaker margin in 2024. The third one is return on asset. Padini consistently outperformed Bonia in asset efficiency, showing stronger ability to generate returns from investment. And the last graph is return on equity. Padini has a stronger ability to generate equity returns compared to Bonia, although both companies faced downward pressure in 2024.
And my name is Adila Fitrah binti Muhammad Zaidi, and my student ID is 202443668. Now I will tell you about the leverage ratio. Bonia shows a consistent decline in debt ratio from 2022 to 2024, reflecting more stable financial management, while Padini maintains a higher and less stable debt ratio with an increase again in 2024. So Bonia is becoming more financially stable by reducing debt, realized while Padini show volatility with relatively higher debt levels. Next, Bonia show a stable and slightly declined debt to equity ratio from 2022 to 2024, indicating better debt management. In contrast, Padini maintained as a higher debt to equity ratio throughout the period with valuation and a rebound in 2024, suggesting greater relief on debt financing. The indicator for this graph is Bonia is managing its debt more especially, while Padini show a stability and higher debt usage. Lastly, Padini consistently recorded a higher time interest earner compared to Bonia from 2022 to 2024, indicating stronger ability to cover interest expenses. However, both companies experienced a sharp decline in 2024, reflecting weaker financial performance or higher financial burden. For the graph, the indicator is the graph highlight financial reveals and interest coverage performance of Bonia and Padini, showing that Padini is financially stronger throughout the period, but both companies face increasing financial strain by 2024. Thank you.
My name is Siti Nazura binti Mustafa, ID number 2024236338, and I will be discussing about the financial ratio in market positioning for Padini and Bonia, covering the years 2022 to 2024. For the first chart shows earning per share EPS, we can see that Bonia EPS was 22.39 cents in 2022, rising to 27.36 cents in 2023. Before it dropping sharply in 16.82 cents in 2024. Padini, on the other hand, had a stronger performance in 2023, peaking at 33.85 cents, but also a faster decline in 2024 to 22.2x cents. This shows that both companies had a poor spending growth in 2023, but they also had a poor profitability weakened in 2024. And the second chart is dividend per share. Bonia start with a higher dividend of 90 cents in 2022, but this was cut down to just 8 cents by 2024. Padini deployed is more consistent, starting at 10 cents in 2022 and gradually increasing to 11.5 cents in 2024. This steady growth signal a better stability for the shareholders. So finally, looking at the dividend yield, which is DY charts, Bonia appear is very volatile in 2022, where they offer a very high yield of 10.8%, but it was dropped drastically to only 3.41% in 2003, before it slightly improving to 6.82% in 2004. Padini, however, maintained a steady yield of around 3.3% throughout all 3 years, reflecting a stronger inconsistency. So overall, for this chart, highlighted two important insights, where Bonia show a higher fluctuation which might attack risk-taking investors seeking for higher returns, while Padini demonstrate a steadier and more reliable performance that will making it more attractive for investors with value in stability. That's all from me.